Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
This is T3 Live Editor-in-Chief John Darcy, here to bring you the Morning Call Express. So Scott, we've continued to see this choppy, lethargic type action in the market as the tape has been driven a lot by earnings season. You've seen some individual stock movement, but overall, like we said, the S&P has been very choppy, trading in a small range. Today we have a turn where we're going to see a lot of macroeconomic data. Do you expect that that could change the nature of the tape a little bit and wake it up?
I think within the next 3 sessions, we're going to know whether this channel that we've been in, the S&P, will resolve to the upside, or will we get a sneaky move to the downside? And if you look at the chart, we'll say of the spiders here, a lot of people have been banging their head against the wall, trading the indices instead of the stocks, which hasn't been, that constructive. But if you look at the overall chart here, here was that May 22nd high. Okay, this was this ascending channel that broke to the downside, giving you that 6% move off the highs. From there, it's been a heck of a move. Up 5% in July, so here's that channel. So I would say a lot of people aren't trying to make big bets in this kind of indice before the next few days, but I think you could start cheating with levels where if you start to see a close above this, just say 169.20, maybe you get a little bit long, and then obviously if we get a daily close above 169.86, but if we all of a sudden start breaking back below 168, then you could see a little bit more corrective type action. So I think, right now we're a little bit more wait and see, armed with levels.
Well, those two big macroeconomic reports that we're referring to are the GDP at 8:30 this morning and then the Fed announcement at 2:15. Which one of those are you going to be watching most closely, and what are you looking for in those reports?
I think really, GDP is important, but it's really going to be what the Fed says, if anything different. Today, I think for clues for traders, you're going to want to see how the TBTs and gold reacts. TBT, which has been a thesis of ours for the past, for 2013, has been trading in this nice uptrend, ever since really breaking above this most recent 69 area. And look how set up this is. So I think for traders, have it on your radar. If this starts getting above, 60, 76, 50-ish, we could see 2013 highs. And I think we've talked many times that, keep this in the drawer, because within the next 6 to 18 months, we're going to see higher rates, but it's just a matter of how soon that happens.
And then one thing we've been talking about is the stealth move lower in Japan. And traders are a little bit fearful about the possibility of that type of move, as we saw a similar type of move that we saw right now in U.S. markets, that they came in almost 20%, and then that proved to be a great buying opportunity. And then it looked like the EWJ, the Japanese markets, were basing for a potential move higher. And then as you can see recently, we've had a sharp down move. It's just a reminder not to be asleep at the wheel.
Exactly, and with this, the Japan has been somewhat of a leading indicator. It topped the same day we did, and then it did have a nice move off those lows. And if you look here at the chart, you will see, here is that, here's that May 22nd top. Here's that move lower, nice spirited move. And then it looked right here, like if you look at this chart, it looked perfectly set up for a nice flag to go back at the highs, and then this is what happened. Boom, boom, boom.
It almost looks like you're looking at the S&P chart. When you block out those last 5 days of action, it almost looks like our current S&P chart a little bit.
Right, so you want to go back to that real quickly. This is the EWJ after a really nice move off the lows, hovering. Then you go back to the SPX. It's not saying we're following it to a T, but, looks good. We're holding higher. So I'm just saying right now is not a time to be, all in long, but it's also not a time to have short in the brain. We'll see these levels and which way it resolves over the next few sessions.
And then gold is another commodity that people watch very closely on Fed announcements, as it's driven largely by Fed action. And obviously there's been all this talk about QE tapering. If you listen to talking heads in the media, you might even forget that there was a Fed rate decision coming up today, because the focus has been on the September decision, because that's when people expect the FOMC to actually potentially begin QE tapering. But the Fed decision today still could drive the price of gold somewhere. What are you looking for in that?
Well, it's been a really nice move since the blood on the street lows. You've had like 2 or 3 tradable moves to the upside, and if you look at the chart of the GLD, you'll see it's tight again. And as a trader, that's all you look for. A little memory lane here. This was a spot where it was tight adjustment to the downside of 161. And this is when it broke below that macro support. And then, we came into this, if you remember, when everyone was, all of a sudden really bearish on gold. You had this reversal here. You had your higher low. Then it broke above this little downtrend. And look where it is right now, holding higher. So typically on Fed days, there's action in gold. Right now, I think it's up a little bit. Sometimes you have fake out action. So I would say here, you have another trend line, and this is a bigger one. So we'll see what happens here. If it starts getting above 129.5, 130, perhaps you get a continuation move into these moving averages, but they want to sell off. It's going to have to break and close below 126.78. So I'd watch this and watch the TBT, in that hour after the Fed comes out with their statements after 2:15.
So while this macroeconomic data could wake up the tape a little bit, we still do have a lot of stock-specific action that I think maybe should be the focus still of traders, because that's where the volatility and the opportunity is. We talked about stocks like Facebook, Apple, Amazon, Baidu. The Chinese internet stocks have woken up a little bit.
Yeah, so in the last week, if you've been in stock-specific earnings plays, you've been rewarded while the indices have been resting. Every few weeks, the composure changes. Now that earnings are coming behind us, it might be more of an indice type tape or an index type tape. So I think there's still a lot for traders to do. It's just a matter of where you want to live, where you want to be, and just stay focused. So we're going to go into all this and more in the long-form version, so stay tuned.